Watchlist Tuesday edition. Matthew couldn't join us this morning. He's got some other things going on, so I'm flying solo today. Again, thanks for joining us and checking us out every week, twice a week now. Also, I want to remind you, feel free to shoot us a ticker or even just to say hi in the chat. We're here. We take call-ins. Only we actually give you some direction in life rather than just hit a soundboard and dance around a stage and get all excited and jump up and down. We'll actually give you some analysis points to go by and maybe help you make a good trade out of it. Anyway, that's why we're here. Like and subscribe, of course, but above all, tell your friends. We're still holding an incredible accuracy rating on our call outs. We do very well with what we do, and we're going to keep bringing it to you every week, twice a week now, even if one of us isn't here. Anyway, looking at QQQ, we can see this obvious descending broadening pattern here starting to take shape. Kind of a craptacular open. We didn't really expect this to become a broadening pattern, but it didn't give us the greatest bear flag break on this setup. Even on a 1 minute chart, it was kind of crummy. It was there, but you wouldn't expect this to be a bearish setup here that you'd want to take risk on because there's too many support points. There's a pivot here for the halfback. There's this support here. There's our whole liquidity zone where any point in this range, we'd expect buyers to jump in. So eventually we found the bottom. We did get the scalp back. I took a nice play from about a 40-point move on this move. And here, the outcome on it, I had to kind of wrap things up. Didn't play follow through going to point B on our liquidity zone trade, but c'est la vie. I did point out that the midday swing would likely be back to this pivot on extension, and we certainly consolidated right up to it. Now we're pushing back into our original plan, which was an A to B move, being a primary and secondary setup here, or a measured move. And when it rejected up here, I guess we could have went short here, but nonetheless, now we're looking to accommodate this maneuver. We're right under the halfway point, probably likely to give us a quick breach of this high, maybe touch the glowbacks here, and possibly extend up to 485.50 or so. But I would be kind of reluctant to take too much position in that going forward to break out of this range until we get through this consolidation. Looking ahead for swing trade stuff on the Q and also in the futures, look at this as our primary move and kind of set that on top. We've already pretty much rejected the half move, so if we can resume above the glowbacks high from today, there is a chance of follow through to give us a full 1-for-1 out of this. But always look a little further left and realize what you're looking at. So big old broadening pattern here gave us the regression line test here, came outside. I always like to draw the regression line in here, and I'm going to put it right across here. Take the secondary move in that and kind of use that as your qualifier. We did breach the low here, but didn't quite go beyond our liquidity zone. I'll draw the whole thing, why not? So essentially, if you draw this expansion or this broadening pattern, as it's known, and you grab this part of it, it can be here or here. You're going to get about the same measurement, but grab this part of it. This becomes your qualifier. So if this breaks bullish, it's got to break out above this high. If it breaks bearish, it's got to break out below. So you can see that secondary move is kind of the same as this one. It bounced off of it, so then it went right back to regression and even came back up to angular resistance. So any wedge, any broadening pattern, doesn't matter. Typically this is the qualifier for breaking out of that range. Markets will range up, down, or sideways in any kind of trend conditions, so this is how we can find a pertinent point of where a reversal would be expected, and if it did occur. If it was continuation, that kind of gives you the qualifier, so I call it a qualifier. There's a pivot there, and if it breaches that with bearish momentum, sure, it becomes continuation pattern. But if you find a reversal in it, that's typically where it's going to bounce back, test angular support as resistance, and then if it breaches that, you get a trade. So here we have a trade that's already kind of commenced. It hit the halfway and rejected, came back to support, tested it. It can still continue above this halfway point and start to become bullish overall, and it can eventually give us this secondary measured move, as this is the primary, there's your secondary. Everything's pretty much laid out as a possibility, but this is not the best setup to jump in just yet. You want to wait for this consolidation to actually break range and give us a trend. Chances are, if we're going to see a trend day, it'll be either tomorrow or Thursday. So if it happens today, cool, I can stand corrected with that. I can change my mind with market conditions, but just kind of be aware that this is kind of what we're waiting for. We're waiting to see if this is either going to break out of this range and continue, or if this is going to be something that everybody else is trying to see. The Bears are trying to see this double top, and they tried to short it. Well, they jumped the gun on it. I see a cup and handle, so this is more like a continuation pattern. So break this range, we qualify, we go bulls. If we fail again and we breach this low, okay, we'll give it the double top. There's your bear target, back to that 473 pivot that's been pertinent all along. Easy stuff, guys, just basic price action. Trade the breach and look for the quality setups. Don't just go jumping in and everything. Don't chase hopium and dreamium. Go for the sure thing. Anyway, we're going to wait for this range to break, and we'll get going from there. All right, let me go into my watch list and start picking off some stuff. I think I'll review last week's picks in the second half of the show and go over stuff we have that we're looking at this week first. And Matthew and I had a couple of agreements, and then we had one that we love to disagree on and also agree on. You'll see. Let me. I hate the Widowmaker. UNG is one that's controversial. It's the most crummy ETF when it comes to tracking futures. Natural gas is, of course, crummy. But I look at rotation. That's what I like to see in it. Again, descending wedge. You can draw the regression line, whatever. Secondary impulse is going to be this guy back here. Sure, if we break it, that's our target, about $21. But if we get outside this angular resistance point in this wedge first, that's got to be where the qualifier would be. About 1890 would be a good scalp target for UNG if you were trading it. Definitely don't put risk in this thing. It's garbage. I only ever trade it with really stupid, cheap, way out of the money debit spreads if I'm going to trade it. Reversion is more likely, but what you look for is this is going to be a kind of a clue for what's expected for energy companies, and we're going to wait for this to break before we really start talking about them. And we have been talking about the smaller nuclear energy companies that are more efficient to trade because the setups are better. AI is going to take a lot of energy. You need cheap energy, and nuclear and natural gas are about as cheap as it gets. Nuclear is the cheapest by far. Natural gas is kind of runner-up, and then, coal and whatever hell else they got to burn for energy down the chain. So for now, watch for the energy sectors to start moving a little bit. In the meantime, plenty of better stuff to trade. So I'm going to run down the list here, starting with a couple of what I guess would be something that not many people are looking at. Let's start with Western Digital. They make hard drives and other computer components, and they've been doing it forever. Long-term company. Weekly chart shows us that it's been in a pretty good upward trend. It's given the reversion trade pretty well, came back above the reversion from the previous high to low here. And we're starting to see a setup for a possible push back to this liquidity zone. So looking a bit bullish for Western Digital. Look at the short term. You can see this nice little cup here. Expect a handle channel here a couple days, maybe consolidate, breach this high, and it's game on for bulls. Target about 72.50, maybe even a push to 73.50. It kind of makes sense. It's about where the next major volume node would be, right in that area. As for reversion pivots, the shorter term stuff, we'd probably like to see it come up to just a hair over that previous high right here, about 67.50. So watch for some short-term scalpers to start taking profit around there. And if we consolidate back in this range again, maybe towards the end of the week or towards the middle of next week, we start to trend above this. So this is kind of the go, no-go line. If the traders let it start to run through here and we start to see some gathering, money flow kind of go into this trend, target's right here. Pretty easy one. Tesla, another kind of runner-up trade, but we've just seen absolute bullishness. It breached the midterm target here. I got so much dope on this chart. It's disgusting. We're in that liquidity zone we talked about last week. You can see that today we tapped into it, tested the mean reversion of this little part of the trend first, and then we're back in business to try and find some buyers to push it higher. Can we get through that zone and start pushing above this high? Maybe break that 265 pivot? Good chance of it, but there's an angular here. And look, dude, that wick stopped exactly at that angular. That's an old angular from way back in the day. I kept it on the chart, and it's certainly relevant. Today went right to the damn penny. I will try not to hurt my arm, pat myself on the back for that one. That's an easy one. Looking further on, though, if we start to see this completely melt into a ballistic bullish move, of course, you've got your 86.6 fib of that wick there is pretty obvious. And then another liquidity zone is even higher. That's this range here. Can it get that bullish that fast? Anything's possible. Earnings are not for a little while yet, but it's coming up probably, October? I haven't even looked. Long story short, reach this angular first, we can continue to be bulls. If not, it becomes a decent little short. And the 2-hour chart shows us 2 reversion targets. So we have this whole move here down to about 240. And if things get really swifty, we can go back to this previous high and hit that 233, 234 pivot area pretty easily. Can we get back to 230? That's possible too, but definitely watch today. See where it leads us. It'll give us a clue. One that just popped up on our breakout scanner. I used to love trading airlines, and then I just kind of fell out of love with it for a while, but then kind of fell back into it. Southwestern's kind of love. It's the ticker, LUV. Pretty decent setup here. We got a nice primary. Watch for this to form a nice wedge right in between these two zones, and I think we could see, let's see, I'm going to draw it with the wick too here, just to kind of give you an idea of what wedge we're looking at. Start breaking out of this wedge, and we got bull targets and bear targets, of course, alike. Either we give half of this move back and test $26, or we start to consolidate and break out and shoot for about 31.70, maybe even give us a full measured move extension up here to $35, 34.80, somewhere there, just above that previous high. Weekly chart. This is kind of a bad example, but we got the downward capitalization trend. We've got the first short squeeze, didn't quite make the LZ here. We got the second one setting up. Maybe it'll push to that high, which is right where that 1-for-1 target would be. Just keep an eye on this wedge. If it breaks out bullish, follow it, make a good bull move out of it. If it doesn't, well, take the reversion trade or wait for the reversion to consolidate and take it back to the mean. You got trading opportunities, that's all. It's just a chart to trade. Long term, can this swing up and give us a full reversion to 43? It's possible. But I'm going to be very aware of how many sellers were in the mix on this week. And they were present for sure. So this is the range where we've got to qualify for that reversion target up here first. So keep eyes on this one. But short term, we'll get a decent trade out of it. Like I said, either we're going to range this one more swing and then break bullish or break bearish. Pretty simple setup. So it's on my radar. I'm not going to call out any specific targets on which way this wedge is going to break, but I know when it does meet midterms, we're either going to visit, this support level here, or run on up and give a half or whole measured move up. So it's in the cards. The setup is there. Just let it break. Give us a sign. We did break that angular once this morning with this nice tall wick sticking out. Found some sellers. maybe we get a little jiggle in here. Day traders are all over this. Wait for them to settle things, finish this conversation, and then give us a breakout. CrowdStrike. Sorry, not CrowdStrike. CRM, Salesforce. Kind of popped up on my radar. CrowdStrike did too. I'll get to that in a minute. But choppy range here. This is what I would call a dirty diamond pattern. It's not the best diamond pattern, but it's consolidation. There's your broadening channel. There's your regression line. Tap off of that. Give us a smooth 1-for-1 back to angular resistance and then some. Kind of closed this gap. We were watching this before, and we knew this gap was here. It was pretty easy swing from here to here. Now what? Well, if we breach this control bar here, this is daily bar here, and we did with a wick this morning, we got a fair chance of hitting about half of this block here back to about 280 or so. Continuation could take it higher. Look at the weekly chart. It's kind of garbage. So half, I would expect probably a high chance of rejection at about that 278 zone here, which is a reversion of this guy, and possibly come back and test support at either 246 or even give a full reversion down to 220s, probably. But if that plan fails and we start to break out above that 278, we could finish the move and finish this back to a 1-for-1, which was the original plan anyway. It did breach that already. It's already been done. So expect more of a chance of rejection once it does touch this and then come back and consolidate or breach. So not making many call outs on that one other than it's going to give us a setup eventually. And I think we might see the setup finish by about Thursday. We might be able to have a good outlook for keeping this on the radar, and on our Thursday show we should have some results on that. Lumentum was another one, LITE. Similar move, but not as choppy. Pretty smooth, in fact. Very nice primary move. Did give consolidation back to the previous range and broke. We're above the halfway point here this morning, and we're consolidating another bar. So we may have continuation. If it does finish the move, outward target here is about 68.70. In fact, I'm going to make that my analyst target. Ding. I like to make those purple, so I'm reminded of their significance. All right. Breakout target, if this thing gets really swifty, is a reversion back to 75 and some change. That nice rounding bottom is taking shape. This is where it's a little dirty. Capitalization gave us consolidation. We've hit it once, twice. The third knock on that thing is kind of the charm. If this is going to trend, that's our first target. That's our second target. Pretty easy pickings on this one. Just needs to breach this little bit of liquidity here. It's got a pretty good shot at it. So follow through is pretty likely on this consolidation. Give this a couple more bars. Maybe even today it'll finish this this range here. Draw a big wedge on that if you want. Maybe by the end of the day or maybe by middle tomorrow. But I'm expecting a move on this sooner than later. If it rejects, sure, take the half back, move back to support either. But it's pretty good probability of breaking out bullish. Another one that's kind of kicked a lot of butts, and this is probably one of the best examples of what market structure should like long-term on an equity. First Solar. I know a lot of people who kind of traded this poorly. This was just really easy trading for the longest time, and then it wasn't, and it got choppy. You can see the diamond pattern. I had it drawn out at one point. It gave us all of these bull targets, but then it just went nuts and just shot the moon out of nowhere, okay? So the hype has capitalized fully. It's given us the market structure we want to see. Again, that nice little rounding bottom, first consolidation, second consolidation, hold the mean, revert. Now we're in a range. Can we see First Solar give us a nice wedge here in this range, and maybe by the end of the month, maybe in October, we start to see a trend out of this? Very possible. That would be primary here and give us, a target of upwards of 270. But it's got to break this range first. There's a couple zones to pay attention to. Here's the key liquidity zone, which we're playing in. We've already touched the bottom of it today. You've got your basic structure here. Primary, secondary, played right range to range. Now we're in the middle. We don't diddle in the middle, we wait. Wait for the middle to break, either way. If it breaks this zone, sure, trade it short to here. If it holds this zone, trade it long to here. But this is likely to wedge, and you're probably not going to hit exact targets unless you lay out the lines. Pardon my slight stuffiness this morning. I've got allergies. All right, so if we were to draw this with a regression line, it would kind of play right into our setup anyway with our range trade, more or less. There we go. And we're looking at the second impulse of the wedge here. Again, I like to draw these. Give me a qualifier. I'm not going to move it until it's time to see the breakout, but either we break angular support, hit the qualifier, comes right into this range here, we go short. If it holds there, fails to break out, goes bullish, well, that same qualifier probably hits the top of this range. Same. Let this wedge out for a few days first. Eventually, it's going to give us a decent trend. It's got a pretty good shot of, hitting the reversion pivot here about 260. I might as well draw that too. Good enough. And if things get above that, sure, we can trend to the previous high and, walk out of this thing. It's done it before. You can see market structure pretty plain. Capitalized, first consolidation, first short squeeze, second consolidation. Example, beautiful. It does its thing. It can do it again. This company gets a lot of attention. It's probably one of the higher retail traded stocks out there, and it definitely gives us the goods when it comes to scalping it. And we've been pretty successful over time with it. Even when Kramer was telling us to sell it, we knew better. That was an easy trade. Call that a Kramer bar. Yeah, whatever. But now we're looking at this. I wouldn't be surprised to hear him talking about it now and saying, buy. But, we just trade the chart. We don't care what he says. No one really gives a damn about him anymore anyway. Sorry, that's mean. Anyway, keep an eye on this thing. It's going to give us some good setups. And in the meantime, it's scalpable. Day traders are all over it. Let us play. CrowdStrike. Finally get into this one. So daily chart, we've met the reversion target more or less. We bounced right off of that 200-day. Now it's looking like a good short. Probably watch for a play into this range here. Maybe short targets about 279 or 278 or so in the short term. Again, watch for this to wedge, and I think we're going to probably in the next few weeks, probably by mid-October, we might see something consolidate and give us a sign, but looks kind of like a double bottom, looks kind of like market structure's done its thing. This is where we would expect breach of mean, so maybe see a breach down for a reversion to 268.50-ish in the meantime. That'd be about where the target would be for this particular short if it breaches this liquidity zone. If it holds in that range and starts to get pretty bullish, and then we start to breach this reversion, then market structure kind of fails to give us the secondary consolidation, which we would expect, October, November-ish. Then we could see this as a big old double bottom, maybe get bullish again, and then let's look at the big picture. This becomes our wedge. That becomes highly tradable range. I mean, really nice. I'm going to borrow these lines. How about something like this? Big old massive range. And CrowdStrike has the juice to make moves like that. I mean, you can see plain as day in the past, it's done very nice moves over and over again. This one is kind of unprecedented. It's not a textbook double bottom. Technically, the second low should have found liquidity below the first low if it's going to be a textbook double bottom. that doesn't matter. Retail just kind of blinks at it and sees, hey, that's got a low here and a low here. That's a double bottom. No, it was first a reversion trade. Look for a second reversion trade and possibly consolidation, and then maybe we get into a trend. So don't trade on hopium and dreamium and hype or FOMO. Trade the chart. This chart says short me, look for support here, here, and here. That's simple. So maybe we finish a move and consolidate here and continue to be bullish in the long run, but for the short term, it's looking pretty bearish, guys. Moving on, one more look at Bristol Myers. We've been kind of off and on this one, but it produces some good charts. We're looking at now it's on a breakout radar detector, so to speak. We've come above this range last week. We've done just up to that range this week here today. We're looking for this beautiful bull flag to break out and continue for a nice measured move all the way up here to about 57 and some change. Reversion pivot is all the way back here up to about 59.50. Let's make that white so it stands out because I like to mark those in a nice clean color. I bumped it. But we got to get out of the woods here first. So look for liquidity at about half of a measured move. You can see that wick there. There were some sellers there. Hello, sellers. We see you. Bing, liquidity zone bound. All right, so first target, if we breach this wedge here, look for a half measured move. Lines right up with point A on our liquidity zone, base of our liquidity zone. Great target. Let's say about 52.80 would be a good exit point for the bulls on this wedge break. Looking at the weekly chart, again, market structure. So all the hype, all the capitalization. First consolidation breached, that failed, came back, tested some lows back here. Every price point, every control candle, there for a reason. Buyers were here. They wanted to see that that low touched and held. Okay, fine, primary move, buyers took it. Now we're back to a key pivot area, pretty obvious market structure now. If things fail to break this half a measured move up and it comes back into this range, it's likely going to go test this pivot and this pivot. Pretty simple. Long term, this is likely to consolidate for a much longer time before it remains in a bullish trend. So for now, really high probability of hitting that reversion target back to this high here. And say about 52.80 would be a good exit for bulls, just to be safe and take profit on this. Either take your profit and exit, or what a lot of people do is they'll have a size position on, they'll cut half of it, leave some runners. If it fails to hold support, take profit on the rest. You know, at least you gain, you get stopped out for a gain instead of a loss. And you have some runners in, so if it breaches that range and continues to surprise you and heads all the way up for this reversion target, which is possible, you've got some skin in the game and you can keep in the trade. So playing it safe is always best. It's always best to protect capital at any cost. And premium setup looks good. This is going to be probably where some sellers are going to be dwelling anyway, because this wick was a result of people chasing this right here, expecting a breakout and expecting a reversion trade. Failure. They got sold exactly what they bought, twice, 3 times. Let's wait and see what happens when we get there again. You know, once a duck, always a duck. Start with that. Let's see, we got time for a couple more. Let me go, and there was a couple that, let's see here, NEE, LLY. Looking at this wedge, we've got a pretty obvious control bar here. We're right in the regression area on the weekly, and I think we pretty well have a bull flag here, guys. I don't know about you. That looks like a textbook bull flag to me. Let's put this down as a maybe. Let me clean this up a little bit. There we go. So if we get above this regression line, we'll at least hit angular resistance. We'll come to the top of that wick. probably look for a target about 940.50 in the short term, medium term, if we can break 921.50 and stay bullish. Looking at the shorter term, 2-hour chart, we've got this primary reversions done. Revisiting this regression line is likely first, so really short term, look for either today or tomorrow a push to like 926 or so. If we break out of this, easy run to angular resistance up here to 940. Pretty obvious. One other thing to pay attention to, this is where liquidity is going to be. So if we can't break out too far of this angular resistance, it'll likely get shorted. So be aware of that too. But long term, that's a bull flag. That's your qualifier. Later on, we'll draw the rest of the wedge. We'll take the secondary and place it above here. Just lines up with the previous high. And if it breaks out of that, cool. We'll take this as a primary. Our secondary sets us up here to like 1,020 or so. That can happen. But don't go chasing hopes and dreams. Trade the short term, and then later on you can react to the long term, and you'll have a little bit of money to compound into a position and make it a better investment for less risk. That's what I like to do. Let's see here. Reviewing a couple from last week. Let's start with Tempus AI. Very short-lived chart, fresh IPO basically, doing its thing. Yesterday during an interview, we were talking about possibility of hitting this reversion target here. And yesterday it was looking pretty bullish. It kind of gave us the look. But now we were also looking at whenever we break an angular resistance, we said this yesterday, it often tends to test that angular resistance as support one more time. If I were to draw the wedge out here and then find our qualifier, which is regression line to angular support right here, it breached it, but then it immediately sold. Now we're testing it for support. If we hold support here, look for a touch again to about 53 even. If it holds there and starts to look bullish again and gets above this high, $59.90 to $60, pretty easy target for a reversion trade. IPOs are tricky, so of course, take it with a grain of salt. Don't go chasing it. Just trade the breaks and wait for the premium setups. Make sure you're pretty nimble when it comes to being able to react to this thing. It's an IPO. It's gonna be volatile. Market structure can do its thing here. We've seen the capitalization take shape here. It found support. Not really much of a consolidation period, but it gave us pretty easy marks getting back to reversion targets on the angulars. Think of this like a secondary consolidation zone. If it breaches this, it will likely hit these lows again. So it can consolidate here and then test the mid-range again. This can end up being in this range for a long time, and certainly keep an eye on that fact. So if this finds, and it is an IPO, this is kind of likely that it breaches half this move here, it'll find those lows again. So be aware that yes, this is a bull target for reversion, but it's got to break that high first with some force, not just wick over and get sold. So definitely don't go chasing this, but wait and see what happens here. Today or tomorrow, this thing will either break this support level and come down and test the mean, or it'll hold here and test the high and then could resume to a full reversion trade. So definitely going to be in the action next couple of days. You got all your targets laid out for you. It's going to go either way. So kind of, I'd rather day trade it. But for swing traders, there's some risk involved here. It's not really the best setup for swing traders. It can give you a break trade and maybe an overnight swing, but I wouldn't put too much faith in holding this short or long until this all works out. So let the volatility fade a bit, and then we'll start seeing some trends. New IPO, and Matthew Tuttle launched this not too long ago. MSTU got tons and tons of flow, more than pretty much any other thing they debuted. But now we're starting to see some price structure here, and looking to test support probably in this range here. Maybe today we'll see a bounce off of like 30.85 and continuation. Let's go to MSTR and chart that instead, because that'll give us some more insight here. And we've been all over this. So the 1-for-1 is on. We knew the liquidity zone was here. It went exactly to the top of that zone today. Came back, tested the support part of it. If we can get back above this zone, sure, we can follow through and hit that 158.50 target. But if it fails to breach this liquidity zone, and we warned you, 152.60 was the exact target we were talking about from this get-go. Consolidation is likely, and if we can maybe hold this pivot today, let's say 145 or so, we might take another trip back to liquidity and see if we can finish the move and go higher. Primary is definitely there. This is kind of our current support. If you got long down here with us, cool. You can maybe have taken some of your position off for profit this morning. If you got some runners still in it, this is kind of where your first stop would be. This is where the second stop would be. If it holds here, cool, we can keep it into this and trend out. If it breaks here, just take your profit and wait for a better setup. Pretty simple. That would probably be back down to like 135, 136, right between these two moves. So easy peasy. Good stuff to set up. Let's see here. I called this one out. This was my darling from last week. It's still cooking. I love Snapchat. This thing's such an easy chart to trade. Guys, market structure. Primary consolidation, secondary consolidation, breach. Now we're outside the 1-for-1 and we're gaining momentum. If we get above this previous consolidation area, hello, nice reversion target, 1190 is still valid. Can we go higher? Well, I'm not going to be playing any Creed records anytime soon, but it's possible. You know, maybe 1325 would be a good range to get to. Sure, it can take up this entire gap. Why not? But for now, you know, I'm pretty happy where I'm at. I'm still long. Can it continue above this range? Well, it certainly tried this morning. I'd like to see it revisit this high wave about 1090. Reach $11, we'll be well on our way to that upward range here. 1190 is pretty easy. There's certainly some bullish momentum here. If it fails here and it starts to break back down, easy reversion, about $10. Pretty simple. If it breaches that, 950 is the game. This is still market structure doing its thing, but it's looking bullish so far. So I'm gonna hang around a little while longer. I'll keep an eye on this thing. I might even go to bolster my position. I can almost see myself setting up a collar strategy on this. Maybe sell a covered call, $11 strike or $12 strike weekly, maybe 27th expiration, and then probably go long on a monthly put 30 days out, you know, back here to the 950 target or so. That might be worth doing. At least then I hedge my position, continue to stay long, and have you know, a good exit target strategy in place. Cup and handle pretty much followed through exactly. Gave us the roundy, gave us the pullback channel, it gave us the rim line breach and test, and then on she goes. This thing's just strong. Yeah, I like this one. That was a good call. Last but not least, we got a few more to look at, and then we'll get to NVIDIA and Micron. So let's go with one of Matthew's darling picks from last week. This is OKLO. Beautiful, man. Doing a full 2-for-1 on this guy. Let me draw this last part of it here. Looking pretty spiffy. Breached that range just a little bit. And make that a color we can reference without going blind here. 2-for-1's pretty much set on this thing. It's already gone through a 2-for-1 here. This is 3-for-1. It's pretty rare, but if you count this whole thing as a trend, it gives you something else. We've done this before. Want to drag this. There we go. So now we make sense. Resistance is here. You can see there's some liquidity zone here. There's some sellers here. If we breach this, let me just borrow this one. It's the same range. Go ahead and make it gray. I have a few people who follow who have some visual impairments with contrast. I myself I have issues with bright screens, so that's why I love to have a black background. But it also helps for those who need a little more contrast in their vision to be able to see a chart clearly. I have a couple friends like that, so I try to keep things relatively opaque so that they have the contrast without the blinding light that just throws the whole picture off. Eyesight's a crazy thing, but you know, there's some considerations to be made for others here. Reversion pivot is about 1/4 of a full-on 1-for-1. If this ballistic, somewhat parabolic trend continues to run, sure, it can run that. Market structure must be respected, though, so this might be it. It might pull back and give us a reversion here. However, let me blow the chart up way back here. There was no hype pushing this. It kind of came out of nowhere, and then we got this. So where was this in time compared to a few other things like, you know, NVIDIA and the whole AI thing? Same. Hype, capitalization, market structure. So if this breaches this, sure, we can go nuts. We can go ballistic. Reversion targets here about $10. Make that one white. There we go. Breach that, get out of this liquidity zone, which I'm also going to mark. You can see where the sellers are. Every wick is a seller. Just think of it that way. Breach this reversion, breach this liquidity, which point B is about half a measured move. Makes sense. If it rejects here, we get market structure. It continues consolidating this range for a long time until the whole AI conversation and energy demand situation comes to a head, and eventually we trend out of it. But if we go nuts and we go ballistic through here, pretty easy. Half this bar is one measured move up from where we are now. Pretty simple to see. If things get really psycho, I don't know about $18 anytime soon, but it's possible. But for now, we're trading this. So short term, we like this range. If it rejects here, reversion, hello, very nice. Market structure, do your thing. Love those range trades, those are easy. Kind of has a couple tall wicks up here on a 2-hour. That's more likely now. So higher probability of market structure doing its thing, following back to these reversion targets. But if things stay ballistic, if they're just going to be another hype wave, we know where the bull targets are too. We know where the liquidity is. That's all known. Easy targets. This is why our accuracy is so high. We know where these targets are. We just wait for the setup to consolidate, break, we trade the break. Don't trade the setup, trade the break. If things reject here and they start to come back through, well, support. You got bear targets galore. They're all here. And market structure says things are more likely to reject here and come back and test these ranges. But again, market structure can be irrelevant when it comes to, well, irrationality. And that quote just keeps getting passed around. Everybody said it. Everybody can be quoted on it. The market can remain irrational much longer than you can remain liquid. Prime example. It can fail market structure and just rip a face off, run into the bull side. That's possible. But this liquidity zone is most important if it does. All right, end of that. I'm going to stop talking about that one. NVIDIA. Loads of dope here. We've got the consolidation complete. We've met all the reversions in place. We've got basically a dirty looking diamond pattern out of this. I wouldn't call it a full diamond pattern, no. Let's look at the 2-hour. Beautiful primary. Secondary takes us right to half a measured move, top of liquidity zone. About $1.25 is my target if this continues to remain ballistic like it has. I was talking about this wedge before. failed the qualifier, came back, tested support, and now we get the reversion here. This is a set of fan lines now. This is our breach. Breached the regression line with force. We breached the angular resistance line with force. Beautiful breakout trade today. Broke the high, broke the high. This liquidity zone is gone. It's still relevant though, because the new wick that we just formed on this 2-hour candle, it's not closed yet. It's right in that range. So I'm going to make this a darker color, but if we consolidate here, continuation takes us here. Pretty easy. If we reject here, we'll come back and test this angular one more time. Pretty easy stuff. With the 15-minute chart, we got a nice wedge potentially forming right here at that zone. So either the bears are going to take half this back or the whole damn thing back and then consolidate and continue running higher, or we're going to see consolidation here and continuation to go higher. So keep your eyes on NVIDIA if you want to play any of those AI energy trades or any of the other semiconductor trades. Kind of use NVIDIA as your litmus test for what can we do next. We got all the targets laid out. This is a pretty easy chart to dope. Day traders are all over this move. Look for some profit taking here. If things get psycho, pretty easy shot. All these bull targets are still relative. Let's look at the weekly chart though. That's just one big stinking wedge. All right. I don't have to draw it. You can see it. But if you were to use your mind's eye and draw an angular down from here, yeah, we're right there. So if we breach this, there's your high range reversion target up here at 130. That was the analyst target. We kind of settled on that too. This is actually an old analyst target from back when Kramer was looking at this on the top 10 things to watch in the market. Gosh, this was probably back in like 23, maybe November of 23. They were bullish as hell on this. All the analysts were saying, yeah, buy, 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 buy. Okay, cool. They won one. And then there was the Kramer bar when he still said buy. See ya. Bunch of liquidity got grabbed by the institutions. That's kind of what Kramer's job is to get liquidity for those institutions. People pay attention to that. And then they bought. They got a better entry than anybody, and they traded the crap out of this, well above and beyond targets, but it hit. Now we found the range up here. It's traded that before, ping pong back and forth. Doji, there's your mean, there's your low. We're back to about the middle. So if this is going to continue to be bullish, we got to melt through this LZ and start continuing on up to the spectacular highs. This is currently the major bull target is still relative, that 130. Just pay attention to it. If we melt through this, this, and this, and we get a full-on measured move out of this, I always try and consolidate to the mean with the primary. Secondary takes us back above that previous analyst target and into previous high territory, and this is the zone to beat. So yeah, NVIDIA is great. I love trading it, and we can still be bulls here. We just got to wait for this range to break. It could continue higher. Of course, we had to breach this range. It's got to be tested. Every time a resistance is broken, it's almost certain that it's tested. Here we are now. Hell, I could pull this on a 5-minute chart. There's your range bar above. Hold this range, hold this wedge. We can go higher. I like it. All right, last but not least, Micron. This was one that Matthew brought up, and I kind of converted with this one. This was pretty easy to see that this is just part of a giant double bottom. We've kind of came back through the resistance area here. If you were to think of it, Micron's been around forever. Market structure's long since been done with, right? But again, it can repeat. Coming down here, capitalize, low, R1, low 2. There's your mean. So $97 is the target in this swing on this little double bottom here. Pretty easy to see. Looking at consolidation, it's bullish. It's been bullish for 3 days now, we had to take some profit off that trade. Okay. Well, we didn't quite test the support level, which is here. We did wick halfway to it and then bounced right off. So we found buyers in here. Mark this as just a 2-hour liquidity zone. And if we can maintain momentum above this little area here, and I'm going to draw it short because it's only going to last for a few days. We maintain momentum above this. Think of the top of this as a pivot, about $93, $90, $94-ish. Breach that, easy target to $97.50. I mean, it's just plain to see. If it fails this zone, it goes through point A in here. Reversion target pivot on this whole move is right back to R1 on the grander scheme of this double bottom. Not this one. This one. Well, not double bottom. It's just a reversal. So take that into note. If things remain bullish, cool. Bull target. If things break here, fail, bear target. That simple. All right, well, I think that's going to do it. I think we're going to probably see some better setups on Thursday's show. I know that there are things that are consolidating, things that are showing up on scanners for breakout trades. They're pretty relevant, but I think most of them are going to take till about Thursday to play out their consolidation point, and then maybe we get some market conditions out of watching QQQ. I can revert back to that chart. Let's show it. Too many Qs. If this, then that. It's all plain to see. Now we're breaking out. We're starting to show, some breach of that high. We're definitely above the Globex here. Yeah, we got a pretty good shot at things kind of following through for remaining bullish. And certainly the setups are looking pretty strong to finish this measured move here. We've got the chutzpah to do that, but just watch this midpoint here. It's right above where we're at now, about what was that, 480, 650. If we can't get above that, look for some consolidation for tomorrow and maybe into Thursday, and then if we're going to resume this trend, it'll be strong, it'll be bullish, and a lot of things will start to fall into place and follow through by Thursday, unless it rejects and it gets capitalized and we get eaten back down to reversion targets. All should be good. So we'll be able to make some pretty good call outs this Thursday, I think, and a lot of setups are going to complete the consolidation and start to show momentum by about Thursday. I think I have pretty good confidence that we're going to have a great show on Thursday. So come back and join us. Matthew will be here. He had some things he had to run out and take care of today. So tentatively he'll be here. If not, I'm also going to try and get a guest on Thursday to talk a little bit about a platform he founded. I'll get into that a little later. Whether Matthew makes it or not, we'll still get him on here and give a little shout out. And plus, he's got some swing trade setups to look at. So we'll be talking soon. Thanks again, guys. Have a wonderful rest of the day. And tomorrow, it's kind of hump day, maybe make some good trades. But Thursday, I think we're going to start seeing some follow through for the swing traders to find some better footing in the market, so to speak.